For me, I've always been a startup founder. And so I look at venture capital through the eyes of a founder. And when we launched TechCrunch, it was a very bad time for founders. It was 2005. Silicon Valley was still heavily infected by the post-bubble crash. And Web 2.0 was, from a technology point of view, Web 2.0 was just emerging. It was the year that YouTube was founded, for example. And it was very obvious that there was no capital for startups. There literally was no capital for startups. No one was investing still. Chad Hurley came to a TechCrunch gathering at Mike Arrington's home and was pitching the YouTube off of a laptop, stood on a sofa with a laptop facing 10 people in the room. And this was a very short time before he was acquired by Google. And fundraising was hard. And it began to get a little bit better. That was when Techstars and Y Combinator and 500 Startups were all founded in the 2005 through 2008 kind of window. And there began to be seed funds, angels, and then seed funds. But that led to a second problem for founders. The initial problem was lack of capital. The new problem became multiple funding rounds prior to a Series A. I remember doing a cartoon of a bird with 4 piles of seeds saying too much seed, because they were doing pre-seed, post-seed itself, which really meant that money was going into startups little by little. The startup founders were getting diluted every time and ended up not owning very much of their company.